of T3 Trading Group, which is an SEC registered broker, dealer, and member of FINRecipic. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. There's the position disclosure there. I got out of shop and JP Morgan since the last time I've done the meeting. Sorry, I'm like trading 3 earnings names at the exact same time after hours, which is actually 4, which is kind of beyond hectic. Coursera announces share repurchase program. I'm not seeing numbers though. I don't know if you said them. No, long Amazon. I crushed Amazon. I crushed Amazon, but I'm down a bunch in Snap. Man, Snap's got to give guidance. I mean, what the heck? You know, who does this guy think he is, the CEO? The CEO is atrocious. This guy's got to go. Like seriously, how are you not providing guidance now? The COVID was 2 years ago. It's like kind of absurd. I mean, even Google didn't provide guidance, which I don't get. Everyone else is now. I'm not sure if Apple is, but pretty much everyone who stopped providing guidance is. I guess Google's not, but guess what? Google the worst performer on earnings out of anyone of the Megacap tech stocks, basically. And maybe that's because they didn't, provide guidance. It's insane to me that Snap is not providing guidance, because the numbers they're definitely not good. They justify the stock being down, 18% after hours just based on those numbers. I don't know, probably not. That Q1 adjusted EBITDA is pretty not good. But I think it's the no guidance. You can't, my entire trading career, with the exception of during COVID, they gave these companies a break during COVID. If you didn't provide guidance, you got crushed. It was a rule. It didn't even matter what your numbers were. It was always, what are you hiding? And I feel like a broken record, because I now remember saying the exact same thing, like on the last couple quarters of the earnings report, and then the stock ends up kind of fighting back during the actual market hours. At least it has these last handful of quarters. The stock ends up kind of fighting back a little bit over the course of usually a bunch of days thereafter. It usually takes a while of kind of sitting there with a lot of volatility, and then they break some sellers, and then it grinds up, and then the next earnings report comes down and it gets smoked. I can't even remember. I'm trying to take a look at this daily chart. I can't remember the last time the stock was actually up on an earnings report. I think this was February, down big, but then recovered. I think that this was the one before that in October, down huge, but recovered over the course of the next 4 days. You had this one here in July, down massive, and went sideways for a long time, and then eventually reverted back up. I mean, that's just been the theme from Snap. Eventually, they're going to throw in the towel on this company and not buy it up. It's incredible that they're not providing guidance. Amazon back below 120. Boy, this Snap's looking bad. $1.75 was the measured move for Snaps. That's right here. I bought a little. This is $8. I remember trading this thing at $8 in the past. Yeah, it's been down here before on a couple occasions. So a little bit of daily support down here. Plus, it's the measured move. So I just bought a little down there. I got filled at 806. Oh, I'm on YouTube. I'm gotta be careful. How does Xerox have more revenues in 2023 than Snap? Do they really? Wouldn't be an earnings report I would even really look at, to be honest. Oh, that's right. I'm looking at $1.75 at yesterday's close, I guess. Not today's. Amazon's still pulling back here. That was a massive, massive move on that Amazon, though. What are Qs doing after hours at this point? A little bit all over the place. I scalped pins at 24.5 just one time, and now it's bounced. I didn't take a ton of stock there. I'm no longer in it. Amazon's still pulling back down to 117 here. I wish this Coursera was trading after hours on that buyback. I'm not sure if anybody's got the numbers. Big sellers on the way down in this stat. Big sellers. Alright, I'm going to attempt to do an afternoon meeting while managing these like 3 or 4 earnings positions at the same time. What a day. Oh my god. What a day. As of right now, including whatever after hours action we have. Oh, hold on, I just put an Amazon. As of right now, including whatever after hours action we just had. Hold on, I just got filled in Snap. As of right now, including whatever after hours action we have. I'm looking at the SPYs. I just sold some Snap. SPYs are up 2%. The Qs are up 3%. Whew. And the IWM is up a 1.25%. Big day today for this market. We really have the return of volatility. Before I switch over to a daily chart, just look at the 5-minute on the SPYs. Not bad, Chris. Look at this 5-minute on the SPYs. Pattern of higher highs and higher lows. This upside grind was insane. Qs, same deal, just insane. IWM, you can really see the weakness in here. Breaking yesterday's low at just after 11 o'clock in the morning. And you can look at like an RSP that was weaker than the SPYs were, the QQQE, which was weaker than the Qs were, down ticked off the open, but eventually traded up. So especially in the beginning of the day, this market was just driven by these mega cap tech stocks again, and it seemed like everything else was not great. And you can really see that, I think, with the IWM breaking lows after 11 o'clock. This market had a pretty serious technical breakdown over the 2 trading sessions ago. I just sold some Snap. It was a big seller at 850 before. We'll see if the seller's back. More Snap. Let's see if 850's selling. Refreshing offer there. Oh, it broke right through it. Some bigger liquidity at 51 cents. Amazon popping back up. Let's go off some of that. 850 buying now on NASDAQ on the bid for Snap. We got a buyer here, a real buyer. Broke. Yeah, so 2 days ago, and I apologize, I'm probably going to continue to get distracted here. 2 days ago, we had this major breakdown for the market. Yesterday morning in the morning meeting, I basically said that we should continue to the downside, but maybe Microsoft, Google can save us, and they failed to do that. The Qs held in really well yesterday. The Qs were able to have an inside day entirely off of Microsoft and Google, particularly Microsoft, and Apple and these secondary names did not trade down too much. Amazon yesterday just off of that. So we had the inside day there yesterday during the trading session. The SPYs, though, failed at that 408. The key levels we were looking at are 408 and 410 for the SPYs. But then the big thing that we wanted to be able to see, and it started with the Qs, especially as we had Meta after hours yesterday, the big thing that we wanted to be able to see was if any of these candles, more Snap, any of these candles from the breakdowns could get negated. So if you have a full breakdown like this with negative Maribozu, closes at lows, and then you're able to fully negate that candle, Well, in this case, you're looking at a false breakdown. And from a failed down move, especially when right now where it seems like everybody and their uncle is looking for this market to be able to break down, from the sell side analysts, I mean, even the Goldman tactical note that came out bearish just a couple of days ago, and then you got the FRC situation kind of flaring up again. You have this failed breakdown that I think everybody was, I got a little better price than you, Chris. You got this failed breakdown that everybody was that everybody was looking for, and you negate that move, and all of a sudden everybody's in trouble, right? Like, look at this move in the Qs, including after hours. We're really knocking on resistance, and now we got Amazon, also performing. It's very notable, but that's with the Qs, and we got a problem with the Qs because it's like 5 companies. Right? It doesn't really represent the market. The SPY does a little bit of a better job, and honestly, the IWM probably does a significantly better job. So the SPYs, whereas the Qs had that inside day yesterday, SPYs failed at 408 resistance and gave downside follow-through. This morning, I posed the exact same question that I posed yesterday morning. The technicals look bearish, but now we had 2 down days in a row. SPY technicals, at least. Qs didn't look nearly so bearish. With that Meta earnings report yesterday, they were gapping up above that key kind of level. Oh, you and me both, brother. This is so crazy. The real question is if those earnings reports can kind of come in and save the SPYs as well. And I thought that maybe we would hold it a little bit better. It's one thing with just Microsoft and Google, but then you also have those Meta numbers coming out yesterday and that reaction. In my brain, I'm like, we might really be able to clear that first level, which is 408, and get back to 410 today. At the same time, I always need to, remind everybody that the technicals are bearish because we had a breakdown. So I could not have anticipated necessarily the degree of this snapback today. It was just massive, and I can only really attribute that to people being caught off sides. It goes back to what I was saying before. Everybody and their mother is looking for this market to break down, and it does, and that's what everyone's looking for, and everyone wants to jump on that train. And now 2 days later, we recaptured all the levels. And I think it just put people in trouble. And in the beginning of the day today, the breadth was very poor. I don't know that specifically from the breadth numbers. It just from what I saw in the market, you did not have strong, good leadership across the board. It was these few key companies, basically these mega cap tech companies, that were breaking this market up. But then by the afternoon session, it really seemed like that picture was improving. A lot of other names started to participate a little bit, started to improve a little bit, and you could see that on the intraday chart of the IWM, where it made that new low, but then all of a sudden was able to break highs and was able to kind of go into this grindy uptrend. The Russell's telling us that we're still not out of the woods. The Qs look phenomenal on the daily chart. The SPYs are also now giving us a failed breakdown, which maybe sets us up for a breakout. We've got that 3200 or SPY 416 as a very key level to pay attention to. The IWM is the one that hasn't done it yet. Has not gotten back above 175, has not negated the breakdown candle from 2 days ago, hasn't even tested the 8 and 21 EMA on the daily chart. So we do still have to pay attention to the IWM. Pay attention to the KRE. I know this KRE was battling 42 today, which is a really key level that it broke down from to potentially get back above. So we'll see if it's able to do that. One thing that also made me feel a little bit more bullish about today, where I felt like maybe these SPYs could do it and work their way back up to 410, was the fact that we had Deutsche Bank and Barclays earnings come out and not be the absolute end of the world. Which I think some people were looking for. The real fears right now are in the regional banks, with specifically select few regional banks and these European banks. And Barclays gapped up pretty big. Deutsche Bank was survivable. So I felt that would help give a boost to some of these XLF names, and it did. So I caught the move that I was looking for in JP Morgan, and I liquidated the position today. Bank of America, I still have some gave a good bounce back, wasn't quite as strong as JP Morgan was, and didn't even really fully recapture that 29, which is a key level that it was kind of testing earlier. But yeah, that's it. That's pretty much all I got for you guys. I'm sure I'm missing stuff. I'm a little bit scatterbrained trying to manage these positions as I talk to you guys. Do I ever look at the RSP to see the market with less influence from megacaps? I do, not nearly as much as I look at just the SPY, but I look at this RSP. I don't know why I can never remember that symbol, RSP. And then today I was trying to like remind myself like to make an acronym like RSP, like real SPY. Maybe that's the real S&P, because it's not, you know, market cap weighted. I think it's healthy to look at that in the same way that I look at the IWM all the time. I love looking at the IWM just because I think it gives you a much better snapshot of the average stock that's in the market, because you've got the SPY and the Qs just so heavily influenced by Apple, Amazon, Microsoft, Meta, Google, and for the most part those have been the biggest up moves in the entire market, have been on those things. And then, you know, the buyback stuff that came off of Google, and Google's been the worst performer, which I struggled on what to attribute that to. The only thing I can think of, especially as I'm looking at the snap, is Google not providing guidance, and I really don't think that the market likes that. So yeah, I don't think I really have anything else to talk about. There were some good trades, some good call outs intraday. I know Amazon intraday actually at one point was a pretty good call out. Was it Rex? Were you in that Amazon that call out that we kind of had off that pivot? Did you keep it into the report? I know you mentioned that you might keep a little bit because it gave you such a big move intraday. Just curious. It's definitely gambling. Ooh, look at you! Congratulations, getting paid. Smart. Yeah, it has to be very small. Has to be very small. And you know, I sold some Amazon throughout the day and throughout this week as well, so I'm a little bit lighter than I had been, which I wanted to be. I came into the Amazon earnings report, kept some stock with a good profit cushion, had an appropriate amount of stock, and you know, kind of got paid off it. I love that measured move stuff for things that I'm in, because I just like threw a bunch of Amazon out in front of like 120 off of that, and was able to get filled on the way up. It overshot that. It went all the way up to 123. Did I sell 122.99? Tell me I sold 122.99 so I can be excited with myself. I think I did. I can even find my executions. Pins weakening here a little bit. That snap ADMA after hours is catching up on the 5-minute chart. Stock slowing down a little bit. Yeah, Amazon and the ADMA caught up to price action on the 5-minute after hours. It's wedging out a little bit. Cool. Happy to answer any questions from Eddie. I think yesterday you mentioned buying Amazon before earnings was a gamble, or most names for that matter. Was there something technically that made you get in before earnings, or with the strength in other big tech names, was it a layer probability? So, assuming you're referencing to my conversations with a pro trader, I've been involved in Amazon since November of last year as a swing trade, and I've been actively trading around a core position. So, I did not buy it into the earnings report today, and I would never do that. I don't think I've ever done that. I don't think I ever will do that. Meaning, it's just pure gambling. You might as well go to a casino. Meaning, I know that Amazon is reporting at 4 o'clock and I buy stock at 3:58. You are 100% gambling. Even what I did is gambling, but it's gambling in a win-win situation and with the house's money. And that's how I like to do it. I have no problem as a rule giving back profits in stocks. No problem at all giving back profits in stocks, because the only way that you can, you know, really enhance the reward side of the risk-reward ratio is if you're willing to give back open P&L. So I always want to keep that initial risk, the initial downside tight if I can, and then, you know, if I'm in the money and trade's going well, that's when I'll look to hold it into the report. And I did the strategy that I said I was going to do. So I had bids out in Amazon in case it was not a great report or sold off on it. I had bids out in Amazon around 103-ish, above 103, and offers out, kind of in front of 120, and stock went up, so I got filled there. Snap was the opposite. Snap I've been doing really, really well in. I've also been up a lot, like a real lot in Snap. It's one of my best names. The name's been trading really well for me. Snap, I had bids out like in front of $9 that got filled, but then I had more bids out lower, including I got that one fill at $8.06, which was a pretty solid fill there. So yeah, but I had my initial bids in Snap starting at a little bit above 9. So I got filled some there, that's out of the money. I got filled some at, in front of 8, that's in the money obviously. I'm trading it back and forth here a little bit after hours, so that's helping me as well. I'll just kind of create some cash flow, and we'll see how it plays out. I'm still doing the same thing with Amazon. I just, nibbled some Amazon on that downtick into like, 118, 117, and, selling it on the way up here as it kind of builds out this wedge, but those are more buybacks. From Anthony on, is this linked? No, it's not linked. Gotta keep in mind it's not linked. On these earnings names, are you trading after earnings announcement, after close in stocks you already had positions in at various prices from previous days, or did you buy during the course of the trading day to day or pre-market? So similar to Eddie's question, no. I don't like saying never. I don't want to say never, but I'll just say never. I don't buy stock, like I was just saying, and I used a probably more extreme example where I said I'm not going to buy stock at 3:58 when they're reporting earnings at 4 o'clock. It's 100% gambling. Really what I mean by that is at any point in the day. And that's why I avoided trading Microsoft and Meta all week, actually. I wanted to be involved. I wanted to be back involved in Microsoft in these 270s. And I just didn't do it because, into the earnings report, I'm just not doing that. I'm not gambling. I wanted to be involved. I kept talking about it with Brant. I really wanted to be involved in Microsoft in 210. And at least I'd be starting to build back in at 210, probably continue to build in to $200. But I would have then, been holding stock into an earnings report with more or less zero cushion on it. I'm not going to do that. So I not only will I not buy a stock the day of or the morning of an earnings report and hold it into the report, which is gambling. I don't even want to buy the stock that week and hold it into the earnings report because I'm probably not going to be able to get a big enough of a profit cushion to be able to do it. I really, really, really do not suggest, and I don't want people to see kind of how well I've done in some of these earnings names this earnings season, and just all of a sudden think, hey, I'm just going to start holding stock into reports. It's a really bad idea. If you want to trade after the report comes out, like whether it was Meta or Microsoft or Amazon right now, and you're trading the price action, maybe you're trading the after hours charts, you're reading the tape. If you want to be able to do that a little bit, I'm fine with it, but there's a couple things I would say. One is there's a lot of risk. So if you've never traded after hours after a report that comes out and you want to start nibbling in it, do it extraordinarily small. Like where the P&L is inconsequential. So you're doing it entirely for learning purposes. That would be the first thing I would say. That's how you need to start. You do not want to get, and it's happened to me, trapped in something after hours. I'll never forget being involved in Facebook one time on some report years ago at the office when the stock got destroyed, and it was down massive just off the initial report. I don't remember. It was probably like one of the worst reports it's ever had, though, of course, in 2022. I'm sure it beat that record. Thing was down massive. I get in it. I start trading it. And then the conference call comes. Zuckerberg says something. And that after-hours downtick in Facebook was one of the fastest things I've ever seen. And it was instantly a massive amount of money out of the money on my position. And I was totally screwed. There are no stop losses after hours. So this is the next thing that I was going to say. If you ever want to start doing it, trade it really small initially because you're going through a learning process. After it's reported, maybe after it's calmed down a little bit, do it small. But the other thing you need to know is that certain order types do not work after hours. And if you don't know that, and you don't know what order types you can use, it means you don't belong trading earnings. You cannot use market orders after hours. Market orders do not work when the market is not open. You can only use limit orders. So no market buys, no market sells, no stop losses. You can only use limit orders. For a stop loss, if you even want to call it that, you have to hit out manually, and you have to do it by crossing the market. Taking a bid and crossing over the offer. So what I would do, if let's say I was short Amazon right now, inside offers 117.90, I see 117.90 is refreshing on ARCA. That's the reason why I'm shorting. I'm going to use above 118. If 118 breaks, that I'm going to get out of the position. That's I just put my short loss, my short on right now. I'm going to take a bid. If I want to get out above 118, I'm going to take a bid for my stock, and I'm going to cross it up to 120. And I'm going to sit here, and I am going to stare at the level 2, and I am not even going to blink. And then if I see a single tick above 118, I'm going to press my enter button as fast as I possibly can. And then my limit order is a bid to buy back my short, but it's crossed all the way through $120 or $121. So I'm giving myself $2-3 worth of potential slippage and room to make sure that I get out of it, and I'm doing it manually. That's how you have to trade if you're trading after hours. I very generally, over the course of my career, have had like really good success with after hours trading on stocks that are liquid enough and move in these big cap tech stocks. I'm very confident about that. I don't know my after hours numbers specifically, but I'm really confident that I've had a lot of success doing it. But there have been a couple of times where I've gotten either badly burned or nearly badly burned. Another one was in stamps.com, and that one I actually worked my way out of. But that was I don't remember. I was down a boatload of money in that thing. I think I was like $10 out of the money, and I worked the position till literally 8 p.m. in an agonizing way, and eventually made back like pretty much everything that I lost. But there's been other occasions where I've just, had to take the L. So I didn't even fully finish reading your question, but that's the answer to the first part. No, don't gamble. I was tempted to purchase Meta yesterday and Amazon today, current earnings, but that's not consistent with my current risk management strategy. Beautiful. How do you determine your risk reward on these trades? How do you factor in the implied move on whether you take the trade? How many days out before earnings are you building your position to lower your average cost? Yeah, so I like to think about double the implied vol move if you want to be safe. Double the implied volatility move. So if that options market is pricing in, I don't know, Amazon was pricing in $8, I want to be $16 in the money to keep it into the report. That's the type of profit cushion that you want to be looking for generally, I think, in order to feel confident to do it. From Kyle, could you talk about your execution on Crocs? Should ask Josh. I heard you mention the price was... No, my price was above 120. Did you bid in once it broke 120? I don't even think it broke 120. Oh yeah, it did. It went to 119.82. I didn't see it when it broke that low. I got in Crocs because Josh called it out. By the time I typed it up, it had already put that low in. It already put in a low of 119.82. But I know my levels. I know 120 is important for Crocs on the daily chart, and I could very quickly see that this was a massive fourth 5-minute candle down into extreme extension into an important daily level that just broke by 18 cents. And it only even came on my radar at that spot. I did not have an alert out because Josh communicated it. So shout out teamwork. I'm not sure exactly what price I got. Somewhere around like 120.75, and then my out at that point was going to be the low. So that 119.82 was going to be my low. So I had like a dollar worth of risk or so. I sold a third of my position at about 122, a third of my position at about 123. Then I had a target of 125. And look at that. The high is 125. I was offered 124.99, and then like a wimp, I canceled my offer and I down-ticked 124.50 or so and robbed myself of 50 cents. I said that out loud too. I know Josh did the same thing. I took the offer on that. I paid the spread. There was a wide spread. And no, my price was not under 120. Is top running still? Bruh. 520%? Isn't this that like BS NFT company? Is this like Top Shot and or Topps trading cards or some complete and utter nonsense? Oh man, that's pretty funny. Do you day trade after hours on earnings reports or mostly just take profit on your swings? I do both. From Anthony. Sorry, I filled on something. At what point in a new trader's development do you recommend starting to build core positions? I think it's more about, so I think it's more about when you can afford to do it, to be totally honest. I want to say that with an asterisk, because even if you can afford to do it because you got a really big, account or whatever, but you're still an entry-level trader with a really big account, it might not be great for you to do yet, and you should probably start with, kind of learning the ropes. But if you've been doing this for, I don't know, if you have enough experience that's 6 months to a year plus, then I think at that point it's less about, it becomes more about your account size to be able to actually do it properly from a risk perspective. I mean, like, I'm always honest. I genuinely think in this business, having a larger account and being able to work with more money puts you at an advantage to being with a smaller account and working with less capital. Yeah, and I really like, just going off Steve's comment, I really like combining day trading and swing trading. It's really been a sweet spot for me. I day trade every day, but big picture, I think that pure day trading is reward limiting. Depends a little bit on the trader's approach, but if you're trading equities and you got a position that's in your favor, the only way you're going to get that 1000x reward, which is going to happen very rarely but can happen, is if you're willing to take some overnight exposure. Cool, that's everything in the VTF thus far. Pin's getting hit here. Pin's making new lows, breaking down on a wedge pattern. What's Snap doing? Snap's building out a wedge pattern. Amazon feels a little heavy here. I haven't been watching it closely though. Yes, sir, Robert. Does Pin's got any daily levels approaching? Oof, jeez, that's not great. It's all the way back down into that support zone of the range that it's been in, around this $23 to $24 area. Pin's just getting hammered right now. How could Elliott Management let this happen? Ooh, there's a 50K bid that just came in. 47,000 shares in the bid, and Pins caused a decent little uptick. He's on ARCA at 55 cents. I don't have depth for ARCA, so I can only see him when he's inside. Which? HKD? Oh, Pins. I mean, we'll see. I mean, it's just kind of trading at the price it's been trading at for a year, at least since last summer. Nice uptick on Pins since that bid came in, though. From Cheat Can, one buy puts expiring in 8 months to protect restricted stock that one owns. How will exercising them at expiry take place if the stock is restricted? I have no idea. I would assume so, but I don't know. I mean, you would just be doing it to offset risk, I would assume, on the restricted stock. I really don't have a lot of experience on that. But I don't know. I guess I don't know. I really don't know. I don't want to just talk out my butt when I don't know. I mean, I mentioned it already that I bought some Snap in front of $8, so that's what I'm selling on the way up. You know, I bought some Snap in front of $9. I bought some Snap around $8.50. I bought some Snap around, you know, in front of $8. So yeah, I'm averaging down in a position that I'm up a lot in. Really, I'm just taking stock back, to be totally honest, if you want to be big picture about it. At increments on the way down on stock that I had sold up on the way up about, stock I had sold up on the way up over the course of the however many months or whatever. But yeah, that's the answer. Cool. All right, there we go. Pins. That big bidder stepped up. I think he's been getting filled. ARCA 24.26 now for 12,000 shares. That's probably the same buyer. Ooh. You just step back? You just step back. I don't think it got filled. I don't like that. I don't like when they step back. It doesn't always mean they're real. I mean, sometimes it means that they're not real is what I'm trying to say. Alright, one final update on some of these earnings names. Amazon struggling in this wedge area around 117.50. Wouldn't be surprised if that thing pulls back a little bit. Pins smoked down 9% into $24 zone. Little buyers coming in, so caught an uptick, but I just broken down on a wedge. Snap totally obliterated, no guidance. Evan Spiegel needs to be fired. Building out a wedge here. ADMA is catching up to it, so it's a bearish pattern on the 5-minute after hours. Could break up, but it's a lower probability. And on that note, great day today. So I'll see you all tomorrow.